Welcome everybody, my name is Koroush 𝐏𝐸𝐬𝐬 and this is the Market Meditations podcast. We chat with fascinating people from around the world to extract mindsets, routines, stories and habits to help you build richer lives.
Market Meditators, today we are going to discuss everything you need to know about trading volatile markets. Hopefully we can help understand when not to trade, what kind of trading suits you in these conditions, and ultimately how to keep your profits over the long run. I think this is going to be a great episode that can add a lot of value.
Before we jump into this episode, don't forget that I send hand-picked market news, insights, and education to over 6,000 traders and investors 3 times a week. To get access to this, all you have to do is sign up to 𝐿𝐻𝐴𝐾.substack.com.
And why are we talking about volatility in the first place? Well, anyone who's been around crypto long enough or has even read a headline or two knows that the markets are insanely volatile. Given it's a new asset class, it's still maturing as an industry. Naturally, there is a lot of volatility, uncertainty, speculation attached to it. Now, this isn't a good or bad thing. Volatility can make you extremely wealthy. I mean, just the other day we had someone on the podcast who turned $2,000 into 10 million. So it can be played to your advantage. But remember, your upside is unlimited. So you can always continually gain money, but it only takes losing 100% once to be broke and have to start again from scratch. Now that doesn't matter if you've got $1,000, $1 million, or $1 billion. If you take a hit of say 90%, you're going to be way back on your portfolio. And if you lose something like 90%, you need to then 10x your portfolio to get back to where you were before. So volatility can be detrimental, and often because downside is limited, the volatility, it doesn't matter when it gets you, as long as the possibility exists that it can wipe you out at some point. It's something that needs to be treated with extreme caution, because we're not trying to succeed for just 1 or 2 years in this market. Most of us want to continually build wealth over 10, 20, 30, 40 years, and then generations if you want to pass that wealth on. So you need to instill these good behaviors and habits. The first thing we're going to discuss is whether or not you enter a volatile market in the first place. And there are 3 questions you need to ask yourself before you even approach this topic. Question 1, do you understand the type of market you are entering? Because most people don't consider this question or take it seriously enough. For example, if I were to enter the bond market, I'm not going to expect to make 10x or 100x returns, but at the same time, I'm not going to expect to take a huge hit on my portfolio just holding something like bonds, which aren't very volatile. If I were to enter the stock market, well, I'd expect a little bit more volatility there. I know it's a higher risk category than property, and attached to that is higher upside potential and also higher downside potential. I also know the general trend of the market for the last 150 years has been slowly moving upwards. So I've got a lot of data to really understand this market and how it behaves. Now, when it comes to crypto, do you understand what type of market you are entering? Because crypto is extremely volatile. I often do polls on Twitter asking people their relationship between BTC and altcoin holdings. How much Bitcoin do you hold, or Ethereum, and how much lower cap altcoins do you hold? And almost every time I get a disproportionate amount of people telling me they have 90% plus of their portfolio in low market cap altcoins. Now, if you're aware the type of market you're in there, where coins are susceptible to losing 90% of their value in hours, where coins are susceptible to undergoing all sorts of scams and shady behaviors, if you understand that and you still want 90% of your portfolio there, and all the power to you. But the key thing is to understand what type of market you are entering. There are people out there who will have 90% exposure to altcoins, expecting a guaranteed return on that and no real volatility. Then the first time the market dips 20-30%, they can't handle it. So you need to know what type of market you are entering. The actionable insight here is to research as much as you can. Look at the charts, just zoom out and take a look at how the asset has behaved over the course of its history, and then compare that to other assets which you have exposure to. And then you'll get a good idea of the type of market you're entering relative to other places in your portfolio. Now, question 2 focuses on whether or not you have a system. So it's like an expansion on question 1. Do you have a proven system before you enter this market? And if the answer is no, right now, if you can't tell me the exact system, entry, exit, risk management plans you have in place for your investing or trading, then you are gambling. You are not investing or trading. You do have no calculated edge in the market. And that sounds harsh, but it is the reality of things. Now, if you do have a proven trading system or investing system, if you know, for example, with investing that you don't have that much of an edge in the market, so you take more passive strategies like dollar cost averaging into the market because you're aware that that is a proven system. Over time, most assets do trend upwards. The stock market is a great example. Property is another example. Crypto, although we have less data to back it, is another example. So passively gaining exposure to these sorts of markets, fantastic. Then maybe you understand the basics of investing and you want to use rebalancing, which is another proven tool alongside dollar cost averaging, and then you start managing your portfolio a little bit. That is a proven system which you can study and learn. When it comes to trading, we need to be even more meticulous. We need to have back-tested trades. So you've got journals of historic trades you've taken, forward testing where you actually trade with a small sum of money to make sure you have a system that works. Then that is how you stop gambling and you can enter this sort of volatile market without getting absolutely destroyed. So actionable insights. What are we going to do with this point? Find the relevant resources and put the time in understanding what you need to build an investing or trading system. Now, if you're not subscribed to the Market Meditations newsletter already, this is what we teach. We're trying to teach people how to build wealth. And I think crypto is a great vehicle to do that. So there's a lot of crypto information, but we try to educate people constantly to improve their wealth building capability. Make sure to check that out. There'll be a link in the description below, whatever platform you're watching this, I'm sure. Then, if you want to take it further, you can start creating your own trading system. Get your own back-tested results and see whether or not you actually have an edge in the market. And then the final action point is to never stop testing. Bull market, bear market, ranging, neutral market, whatever it is, make sure your strategy works. Continually test, develop, and improve it. Question 3. Can you psychologically deal with watching your profit and loss change substantially in a matter of seconds? People always wonder about the risk management and technical analysis or strategy side, but they forget that the psychological game is one of the hardest parts of a volatile market, if not the hardest part. Every time the price drops, are you going to be able to stick to that strategy? Are you going to be able to watch the numbers go up and down? Maybe you can when you're trading with $1,000, maybe you can with $100,000, but the difference between $100,000 and a position size of say $1 million is huge. Watching your net worth fluctuate day to day, that can be very stressful for people, and some people aren't just cut out for that. That's why they should lean towards passive strategies. So the actionable insight would be to be realistic with yourself. Do not trade until you have worked on your psychological framework. Now, what can help with that? 1, experience. There's no substitute for experience. You really need to slowly increase your position size so you can experience these sorts of emotions and learn to handle them. And also, you can do things to improve your psychological framework. Make sure you get a good amount of sleep. Make sure you're eating a solid and consistent diet. Make sure you're exercising. And above all, this is the one that helps me the most. Make sure you meditate. I'm a huge fan of meditation. If you want to learn more about that, there's a great app by, I think it's Sam Harris. Yes, it's the Waking Up app. Now, we're not sponsored or anything, but I think it's a great app which people can benefit from. So check that out. And if you want more information as well, this is something we cover regularly ourselves. So tune in future and I'll talk more about meditation if people are interested. So the second option you have with regards to a volatile market is to focus on maintaining a long-term horizon. So you could actually enter a volatile market and ignore the short-term fluctuations completely. Now, for most people, this could actually be better both financially and emotionally. I'm sure you've heard before that only 10% of traders end up making it profitably and outperforming the market. So you may end up with a long-term horizon and a passive strategy, spending less time in the market, making more money in the market and being happier. So definitely something to consider before moving to the trading side of things. Now, despite the long-term horizon being easier, when you're in a volatile market like crypto, it can still be difficult. And a few actionable tips I can give to help you handle this sort of thing is: one, the emotional tips I gave before. Make sure your standard pillars of health are really good: meditation, sleep, diet, exercise. But then what you can do is strengthen your convictions. So if you really believe in Bitcoin or the stock market, research it thoroughly. Research it thoroughly to the point where you can argue the good and the bad better than most people can. And it's important that you take both perspectives into account. Then once you form this very well-researched opinion, your conviction acts as a means of handling the volatility. So because you understand the pros and cons of Bitcoin, you know why you're entering it, emotionally it becomes easier to handle with a long-term horizon. And then my final tip would be to still have an overarching risk management strategy to make sure, for example, at no point 99.9% of your wealth is in one volatile asset when you're at a point in your life where you can't really afford the volatility and you need a stable amount of wealth. Now, that is very personal to everyone, but still adhering to something like that and having a plan for every scenario can really help with a long-term hold. The final thing I want to cover is actually trading the volatility. So there are some people that see this volatile market and take both a long-term horizon and they decide, hey, I want to make some money off of the current volatility, so I'm going to position myself to do so. We discussed building a trading system before. Now, personally, I've found crypto extremely profitable to trade at. The way I see it is it's the easiest poker table to trade at right now. When it comes to stocks or Forex, I don't have that big an edge, but when it comes to crypto, I spend 24/7 in this market. I am constantly interacting on this podcast with the best CEOs, investors, traders, entrepreneurs in the space, and really honing in on my edge. So when I have an edge like this, I can potentially take advantage of the volatility, not to mention the thousands of hours I have spent staring at the charts, backtesting the markets, formulating different systems. All of this makes it so this volatility is a blessing to trade. Now, there are a few disadvantages to trading this volatility. Number one, as we've said again and again, the emotional cost is extremely high. Slippage can often be extremely high because things move very quickly. If you're very much in the heat of it, you may not get prices you're quoted in the market. And you also need to make sure that your specific trading system has been tested in these sorts of volatile conditions before. To leverage an example, I like to trade altcoins a lot. Trending altcoins that are doing really well. I've got certain trading systems that spot the breakout, and then once the breakout happens, I wait for key retracements and then scalp those or go for extension plays on those. Now, this system works really well for me, but only in market conditions which are very volatile and trending. In other market conditions, that system would get absolutely destroyed. So whatever system you're using to trade a market like this, you need to make sure it's designed for a market like this. Now, that's actually everything I had for this episode. I think it's very important to respect volatility. It can be our friend or it can be our enemy. It really depends on how we use it and whether or not we develop a good, aware relationship with it. I'd conclude by saying trading volatile markets is not for everyone. Be honest with yourselves and make sure you know when to trade and when not to trade. Choose a strategy that suits you, whether that be long-term passive investing, more long-term active investing, or short-term aggressive trading. I know people who have succeeded using every single method, and you just need to find the right one for you. And also, the most important point, make sure you can manage your emotions. Whatever strategy you're using, that really will be the deciding factor when it comes to long-term profitability. That's everything from me. I'll see you guys again on the next episode of the Market Meditations podcast.
Thank you so much for tuning in to another episode of the Market Meditations podcast. If you enjoyed this episode and you'd like us to continue bringing you fascinating people from across the world, please leave us a review on Apple Podcasts, Spotify, or wherever else you like to listen to these podcasts, and share the episode with a friend. If you have feedback or an idea for a potential guest, reach out to me on Twitter at Koroush AK, and do not forget we write a newsletter covering all important topics in crypto and traditional markets. We send it out 3 times a week. The Market Meditations newsletter. You also get early access to these episodes, and you get transcripts and extra notes as well, so make sure to subscribe there as well.